Hi, Jonathan York from IRG BOP, looking at the Reserve Bank of New Zealand's interest rate announcement next week and global share markets. Big news for the New Zealand economy in the coming weeks will be the potential increase in the official cash rate from the Reserve Bank. There have been some discussion in the press and the media that this rate increase that is expected at the June 10th meeting should be put on hold a little bit longer, as the New Zealand economy is still pretty fragile. The rationale for putting it on hold is that the New Zealand consumer is still very much in conservative mode, and the worry is that if interest rates do increase here, that will then increase the currency, will then make our exports more expensive, and so will diminish our GDP growth. On the global share markets, we've seen another very volatile month. May was the worst month for the Dow Jones for 70 years, down around 10%. But if you put into context, 2009, the overall correction was over 60%, and for the actual year of 2009, the S&P was up around 29%. So it does have to be put into perspective. China, a lot has been made about the slowdown in the Chinese economy. That has been growing at double-digit numbers for the last 3 to 4 years, and if you saw a slowdown in the Chinese growth from say 10% to 8%, that will still be way above trend for the rest of the world. And again, to put into perspective, New Zealand is forecast to grow at around 2.5 to 3% for the next 2 years. So with China growing at 8%, that is still over 2 times the growth of New Zealand. So it does have to put into perspective. Given the some of the falls on the share market, it does give some good opportunities to be able to enter these markets at some pretty attractive rates. So if you look at the actual economic data coming out, there is good growth coming through from the US, from India, from China and the Asian sector. Potential query is obviously over the Eurozone. You've got the issues over the sovereign debt. But again, if you look at the currency, the fall in the euro, that does benefit Germany in a pretty dramatic way, because Germany is a large exporter to the rest of the world, and the German economy is growing at a pretty good rate. So I say it does need to be put into perspective, and there are some good opportunities in global share markets. On the domestic front, we've seen obviously Fletcher Building come under a little bit of pressure as the share market has suffered with the global sell-off. But if you saw the latest building permit figures, they were very encouraging, and Fletcher's then put on around 6 to 8% in a couple of days. So it is a question of looking at the facts rather than looking at the fiction and the rumours to see where to enter these markets. Disclosure statement available on request. Call us on 0800 867 323 or go to the website www.irgbop.co.nz. Lots of interesting articles. We will be running a seminar here in Tauranga on the 7th of July, so call us to reserve a space for that. Thank you.